Hi, how was lunch?
Good.
Yeah, okay, this is a really, really tough spot after lunch because you kind of get dragged in and you've been given food that's way too high in sugar. We need to think about the menu next time, by the way. And what I'm going to do is actually flip things around a little bit, and we're going to do questions first instead of questions at the end. And the reason that we're going to do that is because I, in fact, am a millennial. And if anyone's questioning whether I am or not, that's a little bit offensive, and we'll talk about that later. But I'm 32, and what I found interesting in the last little while that we've been talking, and the questions that you were asking Job, and particularly yourself around his relationship with financial products, I think we should have that conversation, even if it's just you and I, because I can answer the question. I really wanted to jump in because I bought a house 4 weeks ago. So I have, just before we do that, I am also going to give you a presentation, and I'm going to give you the presentation that Dan asked me to come here and give. But I thought it would be interesting because you talk about millennials like they're these kind of mysterious unicorns when we're just people. Who in the room is a millennial? I, of course, haven't profiled any of you, and I have no idea. Yeah, okay. Organisations talk to me about millennials like they are this mysterious creature. It's kind of when you're about to go to Africa and people are talking to you about the animals that you might see. And it's really interesting sitting in the audience and hearing people talk about millennials, often because they're not millennials, which is a whole other discussion. But what I thought may be useful if you decide to take this challenge on, because it actually means that you have to participate and not just sit there and be presented to, would be that you can ask me about my relationships with financial institutions, given that I own a business which is worth over $5 million, which has been going for 7 years. It's not my first company. My first company I started at 21 and it bombed badly. So I've had a failed business and I've had a very successful business. Well, it's a bit weird. I still have a very successful business. I'm investing in startups. I just bought my second property. And I have superannuation, obviously, I have life insurance, I have trauma insurance, I think that's part of my partnership agreement, I think I have to, and a bunch of other products that I, credit cards and all that stuff. That's interesting in itself, right? But I'm like, all that stuff that kind of goes around it. So I thought that you may want to ask me some questions, given that I am 32, on the recent experience that I had, or the banking experiences that I have with my business. Is that useful for you? If not, I can just jump into the presentation. What about your question?
Yeah, I was going to say, can you answer that from your perspective?
Can you give it to me again? It was about buying a home, right?
Yeah, just where do you go, or where would you go to borrow money to buy your home?
Okay, so I went to a broker who handled my last house, and I don't really like him. I find him a bit of an idiot, to be honest. And he doesn't really speak my language. He doesn't understand technology at all, which actually isn't a delight for me. It's just a basic expectation. There's just a kind of doing business means that you can operate devices and technology in a way that is mature in the business world. I don't think that that is a point of difference. That I have a completely different and disagree with common or popular belief in that. So went to a broker. Because I'd gone to him last time, I just went again.
So why did you get him in the first place?
Because my brother, who is very financially savvy, said he'll get you the best deal. And I said, yeah, what else does a broker do? And at this time I was 28 when I got my first place. And my business was 3 years old and I was under the pump. So managing director bought into my company a little over 3.5 years ago, so it was just before that happened, so I was running the company solo. So time was the most important thing for me, and he said, oh, they just do everything. And I went, great. So I basically used him as an administrative assistant, to be honest, and I didn't really care about the rate, and I didn't care about the product, and I didn't care about the bank. It was about time. That was the most important thing. And what just happened previously is, okay, I'm ready to buy my second property, so I've put renters in my first one and I'm buying my next property, I'm going to live in that property. I went to him again just because the relationship was already there, not because I thought he did a particularly good job. And my assistant handled it all. And he was tossing up between St. George and ING at the time, because obviously that's the products that he has availability to, although he talks about having a visibility of the whole market. I know he doesn't, obviously. And I know that he's probably owned by one of the big four anyway, at some point. So I ended up going with St. George because ING couldn't talk to me about my business. They freaked out and they wanted me to use my business as a guarantor, which is nuts. I would never do that. That's something that I wouldn't put my greatest growing asset on the line, nor would I ask my business partner to even entertain that. And they said that because I have a profitable business, it's been going for 7 years, I've got a property, I could use the security from the other one outright anyway. They still said that's not our policy, and I said fine, and went with St. George, which was 4.1 at the time, which is high. That's high right now, right? Didn't care. It was about time, and I wanted the property, and I just wanted to get it done. Now, I'm going to just go and refinance. Now that I have time, I will literally refinance. And at the COBA conference where Dan and I met, I was talking to some credit unions, some CEOs of credit unions, and I was like, that's interesting. What does a credit union do? And how is that different? And now, after having a conversation with one particular CEO, I said to my broker, get me refinanced with the credit union or I'll just go direct. Because now I have the time, and that's the conversation that I'm having. Because how he explained it to me was really interesting, and it was personal, and he talked about my business because he got it and he just seen me on stage. I didn't care about the technology, it was just about the product because that's all I'm getting. So that was a really interesting, when you asked that question, I was like, oh, ask me that question, because I think that I had a really interesting experience there. And to be honest, time is a currency to me. And you will find that, so Viacom just released a study that was in the States, granted, but 71% of millennials will abandon a shopping cart if it doesn't get them through at their perceived time that they want to get through. Now, that's huge. If you think about the fact that it's 52% of the population, that's huge, phenomenal amount. That is, time is money and time is a currency. So that's something that I when I'm talking to my clients about experience value, there's a lot of conversations which we're going to talk about in my presentation that I think are just irrelevant and are just about basic expectations, whereas time as currency, I believe, is what's changing organisations and causing disruption. Does anyone else have any questions of a mysterious millennial?
I do.
Hi.
I'm so glad that you brought it up, because I often find that researchers trying to find a particular answer that they already assume before they even start. So I'm really glad that you brought up the fact that people are very impatient and they just want a good product. So I just wanted to say
that's
that.
not, yeah, that's not about an age. I mean,
no.
That's just about being a busy human, right?
Yeah.
You could talk to someone that's 60 and someone that's 30 that have a similar profile, or take a 60-year-old that's got a profile like that, you probably want the same things. So you do also just need to be careful about quantitative studies and what it raises, and it obviously doesn't represent the individual, absolutely, that's a good point.
And take that generalisation between millennials, X, baby boomers, the fact that they're all individuals all the way through.
Absolutely, which is why you need to do qualitative insight mapping and quantitative insight mapping. And either one of those are stupid on their own. And you need to have both. It's really, really important that you have both. And my business banking relationship is interesting because I've got this what do they call a relationship manager or something? Cannot stand conversations with him. I just avoid it at all costs because he just has no idea what it's like to run a business. So when I talk to him, there is no common ground. And he talks to me about products that I would never, ever, take on or buy or need. It's just, he just has no idea about the business. Whereas we've banked with ANZ as a business right from the start. So you have 7 years of data. I say you, maybe there's someone from ANZ in here. But I expect there to be a better discussion. I expect there to be a more personal discussion. And I expect that if you've got a relationship manager talking to someone that owns a business, you are able to talk. And maybe I have a particularly bad one, or maybe he kind of represents the average in that context, not sure. but I'm certainly not having a better experience with any of the other institutions. And I would absolutely think about switching and moving like that if someone was doing it better. And by it, I mean being more human and being more authentic and thinking about my time and how you can use that. So if you've got a higher rate, I will pay that if you talk to me about the time that you're saving, because for me, time is money. That's what I sell. And that's not unique. There's a huge amount of service-based business. It's what drives this country. So that's not necessarily a unique thing, but when you talk about experience design and having a design agency, everyone freaks out because they can't put me in a box. When actually I sell time like any other consultancy. It's just that when you buy my time, I'm thinking about a design problem. Does that make sense? Any other questions before we jump into the actual presentation?
Not a question, but just taking the point earlier. Impatience is probably the new baseline expectation, isn't it?
Yeah.
Because once you build an expectation through impatience, impatience starts again and again and again. It never ends, and that has to be the continuous deliverable that organisations have to create.
Absolutely, and from my point of view, it's about an exchange, which Rocky talked a little bit about this, Jock touched on this as well, which is that if you think about an experience economy and markets that are just getting smarter and they've got less time, what they want is something for their time, their money, their loyalty. They're wanting an exchange for that. It's about a somewhat skew towards the customer's benefit in terms of a ratio of value and effort. So if I'm going to give you my time, if I'm going to give you my money, my products, what is it? You know, it's not your product. I'm going to have a home loan. The question is just who I give it to. And in my mind, you'd all kind of auction for it, but that's hopefully what will happen in 5-10 years. Any other points?
So Michelle, if you're not happy with your broker and you're not particularly happy with your banker...
No, I think they're both morons.
Yeah, so who would you trust to point you in the right direction today?
Well, that's a really interesting question. And I was asked by a few credit union CEOs at the conference we were at, I think maybe because they were trying to get me to be their client, but hey, it worked. So I respect that. And I think that the problem is that you have to get me to care because I'm running a business and that is my singular focus, and I now have other businesses and I'm investing in startups. I don't necessarily care about saving 0.1%. I just don't. Even when you say, oh, but that could be $300–500 a month, that time to me is worth more than that. So what I'm interested in is value-based relationships, or the fact that when I interact with you, you are going to be 50% faster than anyone else. Or you will use my data in a way that actually values me rather than just for your own interests. No one is having that conversation, really. That's why, generally, if you talk to someone my age, they will say, I would absolutely bank with and am going to Google, Uber, Airbnb over you. Absolutely, no doubt. Because they get data and they get personalisation and they get value and they get relationships and they get time, and that is something that, particularly in Australia, banks just don't get. So in terms of the banking sector, who would I trust? No one. And that's why I'm largely a bit kind of shrugging my shoulders, because I know that I don't necessarily have the best products in the market, but I don't really care because the best one's probably not even that much better than the ones that I've got anyway.
So if you want some tax advice, or you want some superannuation advice, or you want some negative gearing advice, who do you trust?
Yeah, so I do have a very, very good team of management accountants and consultants, and although have their own agendas, obviously, but I believe that they give me enough advice that I can keep on running and
that's probably unique to your circumstances, which is completely atypical of a standard millennial, I would suspect.
Well, is it? I think that's what you need to be careful about. Is these generalisations are really, really dangerous. What makes me not a millennial?
Well, got people around you, you've got access to people around you that I would suspect most millennials would not have access to people around them.
Not every millennial is running a $1 million business.
Absolutely not. But if 1 in 2 of the millennials in this country are going to run their own businesses, how many of those are going to succeed? What, say, by the stats, it's what, 15, 20%? In terms of actual success? Don't you want?
8% failure rate in every 5
Yeah,
years.
don't you want those customers? I just, if you can make it work for me, then you'll get the ones that are.
Oh, I understand that.
You know, I just wonder.
My question was really about we're trying to find organisations, because trust is very important.
It is, but it's subjective.
Well,
And it's trust in a, particularly when you talk about financial context, generally means stability. And particularly in Australia, that's what it means.
I think this comes back to the whole thing that we're dealing with individuals all the way across, and we shouldn't be generalising in regard to a particular age group, even 2 people in the same age, because everyone actually has different needs, and you actually have to determine what those people's needs are, and that's either going to be through a conversation or through data, so you can do the best thing for people and give them the advice, because no matter what, even if you go to a broker, a lot of brokers out there, be it a financial broker or mortgage broker, are going to put you where they get their best income stream from.
Yeah. Absolutely.
Their sway to start with. So ultimately, to say that you're relying on someone, it's all about you've got to build that trust up with the individual. Once you get to the point of trust, it takes time in regard to that. Once you get to that point, unless it's been the whole conversation that we've had, is that everything we've got to do is trust-based. The whole financial industry works on a set of rules, and in essence, is trust-based.
Well, and highly regulated in this country.
Yeah, but ultimately, it's still all trust-based. In regard to all the settlements and everything that occurs throughout there.
Yeah.
And that goes the same in regard to your relationship with your brokers and your advisors.
It does, but I also think that what we're talking about, if we just think about trust for a moment, is about relatability. So there is a chance that if I found a broker or a relationship manager inside a traditional banking institution that I actually connected with, I could absolutely trust them. I just don't necessarily believe, nor am I going to waste my time trying to find that person, because there is just such a conversation gap, and I don't go and find them. I'm not trying to go and find them. So for me, trust and relatability and authenticity are somewhat linked, and the point is that your market is essentially has now gotten smarter and more nimble and wanting different things faster than the operational technology and data models have. So there's this gap, which is where you've got big corporates trying to play catch up. So I think that the trust conversation can be overly simplified, and it's somewhat bigger than that. Should we move on? Yeah? Okay. So just for some context, so I'm an experienced designer. I'm assuming that everyone here knows what that means. Yes? Okay. I work for a company called Neo, and what we try to do is use an understanding of the people that will actually use a product and service and design it based on that, using both quantitative and qualitative methods. Does that make any sense for everyone? Firstly, what I wanted to talk about is a bit of a frame of reference of what I see and what my organisation sees, having worked with financial institutions, insurance companies, wealth management agencies, companies. I'm still getting across your language, which is one problem, over the years. So there's kind of the institution or the bank in the middle, and there's products around that. Then there's people, and then there's people's worlds. That really is, obviously I'm simplifying that, but that is how financial institutions operate, largely, unless there's some models that I'm not aware of, still today. It's very product-centric. You're saying customer-centric words, but you're not doing anything customer-centric. It's product-centric. Everything is product-centric. So you're kind of going this way. Briefs that I still get today are about products. We need to sell more of this. We need to sell more credit cards. We need to move our people from home loans to superannuation accounts. We're looking at this age group, and this is what we need to do. It's product, 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 product. It's not how we're going to understand that there is essentially people that are people like you. They're not mysterious. They're just people like us. They have worlds and context. Then there's products, and then there's the bank. I really, really believe that if we can reframe this at an organisational level across from the top down to the bottom up, that is who is going to take this market. And it seems really, really simple. It's not. I realise that we're talking about fundamental change, and we're talking about steering committees and leadership boards that are traditional and do have legacy ways of thinking. But if you think about that, this is how it works. This isn't oh, well, that's an opinion. No, this is kind of how it operates. Think about how your own world operates. You have all of these services that essentially do things for you, and they fit into your world, and you're there. And it goes this way. Right? So that's a fundamental problem in that this is what's actually happening. You're saying that you're doing this, and I don't mean you as in the room, I kind of mean you as in the financial sector in this country. So you're just going to have to take a hit for that for now. But there's a big difference between this model and this model. A really, really, really fundamental difference. And if we think about particularly the markets that you're trying to get, they're smarter and they know that this is not the model that you are actually using. So Jock talked about the thing that connected Airbnb and Google and a few other companies was that they were all started under 30. Sure, that's one connection. But another connection is that they really put consumer, audience, user behaviour at the centre of their organisation, and the whole organisation has been built around that. So they have people that's job titles are things like making people smile and customer satisfaction, but not in a way that we talk about it, not in channels, in a way that is just about understanding the market. And not in a traditional market insights audience way. I mean real deep understanding of human behaviour, which means getting outside and actually talking to people and actually integrating feedback and using those to be better at business. That's, in my opinion, what makes those organisations different and why they're winning. Any questions, thoughts on that? You guys can ask questions throughout. There's enough of you that I don't need to necessarily rant at you for the next 30 minutes.
Michelle, there might be some pushback.
You're the MC, you can't ask questions.
I'm allowed to participate because you got me very excited about something. People could potentially push back on the fact that a bank is outside of a product. That people may think of a bank before they think of a product. They might be an ANZ user all of their life and will only think of the products by the paradigm or the view that their bank is their bank.
Yeah, so this is a connection, absolutely. So you may have someone that goes that way, but that's not going to save you.
No.
And I'd say that if I was the CEO of a financial institution, I certainly wouldn't bank on that. Anything else? Does everyone agree with me? Or are you all just humouring me and saying the millennials just talking crazy and Dan got her here to kind of disrupt our thinking, but we're all just going to walk out and forget about it?
Explore the idea that you would bank with Uber over ANZ.
Oh, any day.
Why?
Because, and yes, this is unique to me, because I've met very senior people at Uber, because they're very smart, because they understand human behaviour, they understand solving real problems. They care about money, obviously, but I believe that they have nimble minds and they could run my financial products and world in a better way than ANZ. They run a business. And I know ANZ's a business, but it's not though. If you talk to anyone generally in terms of frontline as a consumer, they've never run a business. Some of them they've worked in ANZ the whole time. You talk to my relationship manager, I guarantee that after 7 years, he still doesn't even know what I do. But I could talk to the CEO of Uber and he's talked to me about his experience design department. And I know that's very, very personal, but that's the point, and that is the honest answer to why. I probably wouldn't put all of my products there, but I currently, one of my home loans is with CBA, the other one's with St George, my business banking is with ANZ. Don't have anything with NAB, but my superannuation's with Australian Super, I think.
Yeah, what do you see as like putting aside that banks and Uber and Airbnb provide different type of products, well, do you see a fundamental difference between the types of organisations in terms of what they're providing?
I see a fundamental difference between the values and how smart they are and whether they get time and how they use data.
So where I differ a little bit is a bank provides a product. Uber, Airbnb provide a marketplace. They don't design the product.
They provide a service, an intangible service that I assign
Uber's
value to.
value add is an app. The product of the car and the driver is provided by a party, and the buyer is another party. A bank actually provides the product.
You are talking to me from here.
So I'm not going in concentric circles.
This is my very point.
A bank, when you walk into a financial institution, right? So I think in my mind a more accurate comparison is the broker. The broker doesn't provide a product. The broker provides a marketplace for you to connect to other products.
Sure. You and I could argue about this, and I'm happy to over some red wine later because I think it'd be a really interesting discussion. But we're not going to agree because you are talking to me about, you just said, Uber is an app. Wow. It is so much more than an app. It gets me to where I need to on time. It talks to my accountant directly. All of my team members travel in Uber, and I never reconcile anything.
So I disagree. The car gets you to the place on time.
And
it shows up on time. Uber tells you when it's coming.
Where do you work? No, I'm interested. Where do you work?
Funny enough, at a fintech.
Right. Okay. I disagree completely. I don't believe that that's Uber's product. I believe that Uber's product is the fact that they move people and they do it better in a more human way, and that's why they're successful. Let's talk about it later.
Product is like word versus solution.
Well, I think yeah, absolutely. We obviously need a language shift, and that's kind of my point. The point of me showing this. But I have a product. My business is based around a product that I will make you more successful than your competitor based on the fact that I'm a great designer. That's a product in my mind. So I think it's semantics, but the point is that it's about service, solution, product centricity versus not. That's the point in the state of the nation.
So I was just trying to reconcile the
Thank
vehicle
you. Close the loop between us. Yeah.
So instead of having a goal for a product, you're better off having a goal to develop a relationship with a Michelle or a Tom and Jerry.
Yeah, make my business better. Save me 20 hours a week. Make my payroll work better. Make me care about superannuation because at the moment I really don't have no idea why I need to do it.
Branch manager has a relationship. His goal is to build a relationship. 3 Michelles a month. The product can't happen. Because if he builds that relationship, you're not going to look.
Yeah, and that's.
He's going to convince you to come from the ANZ and the.
Absolutely, and we're now talking about business philosophy, but I subscribe to that. Absolutely.
And John, that speaks back to John. That speaks back to what Jock said this morning, though, about trust.
Sorry.
That speaks back to what Jock said this morning about trust.
Yeah.
If you had a branch manager that could build trust in a relationship.
Well, it's something we've done. Community Mutual did it several years ago, and we did it last year.
You're doing it well.
Changed our targets.
I'm in the market.
We changed our targets from product numbers and goals to relationships. We identified the millennials that we needed between 18 and 39, whatever you want to call it, So we had the single, the Michelle or the Tom, who might be at the 25, X number of these. Then the next group.
Did it work?
Sorry?
Did it work?
Yes, certainly worked, yeah.
Yeah.
It's a mindset change for everyone.
It is a fundamental mindset change, which is why I put a very simplistic model up here, because that is how you change mindset.
Because one of the problems with our market is our market's aging, we heard that before. So we need to focus and work out how we attract these, the future valuable members between 18 and 39 now, and they grow and build their product with them. But unless you develop that relationship, the products aren't going to come.
Yeah, because it's about value and the
Absolutely.
exchange of value. Okay, let's move on. So if you think about this as the people's worlds, and we just kind of throw this into a more isometric view, you've got people, you've got the interaction points that exist in their world, and by that I mean it might be an app, a website, a call center, a face-to-face interaction, a form, whatever it is, products, and then the bank. And essentially you've got this kind of two-way flow where people using interaction points get to their products and therefore interact with the bank. And then you go the other way as well, right? That as a reframe of thinking about things like apps and websites, and again, I know I'm a millennial and I'm supposed to be addicted to technology, but technology is a what? It's something that enables you to do something now. It's a mechanism, it's a distribution channel. It's not going to save you. The mindset shift is the thing that's going to save you. Because if a new technology comes out tomorrow, you are dead again because you're still trying to catch up to things like having the best app. If you don't have the best app by now, just need to forget about it. You're not going to. It's done. But what will changing the conversation do? What will reframing it do? And so if we think about that, if we think about interaction points and the types of interaction points that consumers have with organisations and institutions, and how that's kind of changed over time, there was face-to-face, there was catalogue type transactions, which happened in about, I've got 1498 here. There were then the rise of retail, which was about 1796. There was then mail order transactions where you could buy stuff and interact through the mail. Then came telephony, obviously, web, social, instant messenger, mobile, connected devices, virtual reality, and potentially very closely in our future is things like bio and connected technology and genetic modifying, all those sorts of things. That's actually a bit scary, so we won't talk about that too much. Now, what has happened, what I'm now going to talk about is this thing called omnichannel, and the reason I'm going to talk about that is it's an example of something that isn't going to save you. It's something that is at best meeting a basic expectation of a customer. And I believe that we need to stop pretending that basic expectations are disruption. And I'm going to talk through that now for the next few minutes. So what's happened is every time we've essentially tacked on a channel due to technology, organisations just sort of do this, where they're just built in silos. So there are people that are ahead of digital, or ahead of social, or ahead of the call centre, which I just can't quite wrap my head around, because I don't quite know why, from a business point of view, you would build a business in silos. It just doesn't make any sense to me. As a business owner, I can't imagine putting some of my team in one channel and only telling them that they can interact in that channel and they're just in charge of that channel. It's bananas. I can't imagine that. Can you imagine hiring me and you speak to one person if you're interacting via email, and one person if you call, and one person if you come to my office? Like, that is crazy, right? You would fire me because that doesn't make any sense. But that is the comparison. That's what it's like to interact with large organisations in this country. And it's not just banking, it's sort of all of the legacy organisations. So what's happened is you've essentially got these kind of big blocks, which are organisations for the purposes of this presentation. And then you've got silos. People are trying to interact with you. You're talking about omni-channel. Who's got an omni-channel strategy or trying to do omni-channel or talking about how your channels need to talk to one another now? Some of you don't want to put your hands up because you know I'm going to say you need to stop doing that, but thank you for the courageous ones you have. And is the rhetoric around that in terms of it going to differentiate you and it going to make you different or make your customer experience better or make you have access to more data, all of those things? No, what is yours?
We're trying to let people, I guess, deal with us in different channels rather than having to go to one or the other. And at the moment they have to start from scratch. If they call up, they've got to
why are you doing that? What will be the benefit to the customer?
Well, hopefully they don't have to go around and spin the same wheels multiple times.
Yeah.
So if you call up and you want to start a home loan application, the person on the call will take it. Then if you go into a branch, they can't see it that's happening and they start from scratch.
I deal with banks. Yeah, I agree. The ANZ can't actually understand if I'm a personal or a business customer and you have to make 2 phone calls. Get it. But how is it going? Is it going to make people choose you over someone else?
Well, they've chosen you to get to that point.
So, right, so you've already got them.
That's not going to attract people, no. It's
right.
I just only deal with them when they come in the door.
Okay, exactly. It's not going to attract people.
No.
What's happening is that these silos mean that people are essentially having to jump in and out of touch points, which you know this is a problem. And what people live in, where they live, is that depending on what I've got near me at any time, I will just pick it up and expect that basic features, functions, services will be available. That is not delight or innovation. And if that's what anyone's talking about, you need to stop talking about it. And if you're hearing other people talking about that, please help me, because I just need everyone to stop talking about it. It's driving me crazy. Because it's a conversation that we're having and we're pretending that it's bigger than it is and it has more value than it is, because it is hard. And I'm not saying that it's not hard. It's political. There's a huge amount of change. Where I'm talking about breaking down channel-based silos across corporate organisations entirely. That's big. It's technically really hard. We're talking about a huge amount of money and time and effort that's going to need to happen to change that. Customers, at best, will shrug their shoulders because they do not care, because it's a basic expectation. So that's hard, because we've got something that's really, really challenging inside an organisation, but the consumer doesn't care outside of it. That is a challenging thing, but I just want us to call it what it is. It's okay that it's a challenge, let's talk about that, but let's not talk about it like it's going to save us. I get briefs which are called omni-channel strategies, and how can we delight our customers through being an omni-channel organisation? And my response is, you can't. You can't, because you're too late. If you're talking about this now, you need to stop talking about it. What is interesting, I believe, is if you think about how people, and I'm not talking about just millennials, I deal with organisations that are looking at all age groups, not just necessarily people that are 18 to 34. But if you think about the filters or the expectations that people have when it comes to products or service exchanges, they essentially have kind of filters that you need to get through. Now, at the very end of the scale is anywhere, anytime, which I'll talk to you about in a minute. Then there's low effort, high value. Then nimble and responsive, and then human and authentic. If this is expectation, on the left you've got meeting basic expectations, and on the right you've got exceeding them. Now I'll just explain what I mean briefly about each of these. So when I say anywhere, anytime, that's where technology and data sits really. That's where omni-channel sits, that's where multi-device strategies sit. It's that there is a basic expectation that I will be able to access my data, your services, your features, your product, whatever it is, anywhere, anytime. It's a given. Low effort, high value, what that means is that there is an exchange that we are having, and it has to be at least equal, if not in my favour in terms of the ratio. So that is a really, really interesting discussion. I had a few board meetings last week, and I was talking to senior leadership members, senior stakeholders, and said, talk to me about that ratio. Honestly, talk to me about the ratio. And what if that was a performance indicator? What if that was the conversation that you were having with your managers, where you were talking about how you were essentially going to, at an aggregate level, make sure that it is at least balanced, but ideally skewed in the consumer favour. Now, the question that the CEO said back to me, which is a very CEO-like question, which is a smart one, is what happens to my revenue if I just make consumers happy? Well, if that is at odds with your revenue structure, then you are in trouble anyway. Really. Because the consumer value and the value to the organisation should ideally be the same, because there is a value exchange that the two are having. I give you money, you give me something I want, ideally. So that's low effort, high value. Then we think about nimble and responsive. So I talked a bit at the start about time, and that I value time because I'm a business owner, because I'm inherently impatient, more than money sometimes. And in some service interactions, I will choose time over money, depending on what it is. There is also an expectation that things will be fast and simple. I don't think that that's age specific, by the way. I don't think that that's necessarily a demographic. I think it's probably a personality trait more than age. It's you are either happier that things are slower or you're not. People live on different cadences, different time continuums. Some people want fast, some people want slow. I've got some staff that work for me that are 20 that sometimes just really want time. Maybe it's because they're kind of creative genius designers and they're a bit precious, but it's also because some people just have different personalities. And there's probably a continuum there, right? Responsive means, what I mean by that is data. So there's a whole other long discussion that we could have on personalisation and responsiveness and how organisations need to be thinking about data. But there is an expectation that you've got the data, everyone knows that you've got the data, taking data, storing data, that's not new. The question is how you use the data, how you mine the data. And in this sector, no one is actually doing that well. They're really not in a smart way. There's no soft factors that are captured. Things like preferences in relation to format, preferences in relation to tone, what I care about, no one's capturing that. Maybe in those really, really awful CRM systems that some people are using, you shadow call centres, and sometimes there's those little note boxes and call centre agents are typing into them, but they're not mined, really, and they're not really attached to my profile. And then if I walk into a branch, or if I talk to my relationship manager, no one's seeing the notes. Or if they are, they're opening them, there's this kind of big paragraph of it. So if I were you, I'd be thinking about a few things when it comes to personalisation, which is how do I know what to capture? When do I capture it? What behaviour will tell me that I should be capturing that thing? So if person A does X, I can assume Y. And then what will I then change because of that? So it's a cause and effect model. The problem is that no one's really doing the effect. So if you've got the data, how are you using the data? Other than for your own internal interests. Because consumers will more and more make you work for it. And I imagine that there will be a time where I could put my financial data, my activity, up in a marketplace and make you bid for it. Imagine that. I will control my own data and you will have to pay for it if I don't want you to have it. And you could potentially pay for it. If you knew that you could take all of my financial products and I said, yeah, okay, I'll let you bid in the auction for all of my products, but it's going to cost you this amount, you'll get access to my data and then give me the best offer, give me your best. That isn't something that is impossible. That is a world that I can absolutely conceive.
One thing also in there is not just looking at data inside thinking, or not to look at data in a silo either, because there's interrelationships of data that you have on individuals that show you trends.
If you can't draw intelligence from data points, then they're just data points.
Yeah.
But the conversation largely is that we've got the data. Okay, but what are you doing with the data? And a cause and effect model, or what I call it, is an initiator of change model, is what will change that. Just hurrying me up.
No, please.
Even though you get to trash talk me at the beginning. So just to put a sort of another model in, if you think about the fact that these are the 4 filters that consumers are gauging and rating their product and service experiences around, imagine that their world sort of looks like this, and you're here, then you've got a bunch of other sectors, this is just a subset of those, and the omni-channel thing is here. And this is expectation. So at best it's there. It's one of the things that they will think about. So that is, I'm using omni-channel as a granular example to try to get you to then think about the fact that how many of those things are we talking about that have this much impact, and what are the real questions that we should be asking, and what's the real reframing that we should be doing to really change business, rather than doing this incremental sort of gradual kind of improvement so that we can tick our KPIs off. I've been given 10 minutes, so I'm going to skip this and just talk through a few examples from my point of view of organisations, brands, products, services that